Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
The finance minister there pretty much confirming every story that we broke here.
सैनिटरी पैड्स के ऊपर कोई भी प्रकार का जीएसटी नहीं लगेगा। पेंट्स एंड वार्निशेस सबके रेट 28% से 18% किए गए। इथेनॉल उसको 5% किया गया। हैंडीक्राफ्ट आइटम्स 18 से 12%। फोर्टिफाइड मिल्क विल ऑल्सो बी एग्जेम्प्टेड फ्रॉम जीएसटी। जिसका टर्नओवर है अप टू 5 करोड़, उनका टैक्स पेमेंट तो मंथली होगा, लेकिन रिटर्न क्वार्टरली होगा।
Good morning. Welcome to Bazaar Morning Call. I'm Lata, and with me are Sonia and Anuj. I think the color of the markets will more likely be Sonia's green than my red. And I'll tell you why. The global cues are starting on a somber note. But we perhaps have two positives that might make us look different. Even in the global negatives, dollar is weak, which usually plays itself out as positive for emerging markets. But I won't get into that. Let's wait to see how it plays out. At the moment, it's playing negatively in Asia. But for us, the fact that so many goods have become cheaper, there is going to be a spring in the step, I assume, expecting that consumption will do better. So the initial reaction from the market should be positive for the slew of rate cuts that were announced by the GST Council. The second positive, according to me, and I don't know, this I'm in a terrain where I wouldn't definitely be the expert, there is an unnoticed factor in the no confidence motion. The support that came from the AIADMK for the BJP, that gives a large southern bastion to the BJP. So if this can be counted on, then the NDA is in a very strong position. I mean, it's not as weak as perhaps the walking out of the TDP made it out to be. This could be viewed positively by the market. Nobody doubted the confidence motion getting defeated or the no confidence getting defeated. But I think the texture of support to NDA now, according to me, has improved, is better off. The only negative I see for the market besides the global cues is the HDFC Bank numbers. It's been a bastion of performance. Everybody is invested in HDFC Bank, and the numbers are among the weakest that they have reported in terms of growth. So that may perhaps irk the market and see some profit taking. And you know, it's got a giant share in the Nifty Bank and also in the Nifty.
Well, absolutely. As Nimesh was telling us, after 4 years, HDFC Bank has reported sub 20% growth. So I guess that's the big headline, right? Lata, morning. Anuj, morning. But since we're talking also about the positives, there's been good news in terms of some of the numbers post-market hours on Friday. So whether it's Bata, whether it's Havells, the consumption stocks, you know, have done pretty well. I mean, Havells saw that 40% revenue growth. Of course, it includes their acquisition, but nevertheless, you also saw that huge UPL acquisition. Now UPL becomes the 5th largest agrochemical company in the world. So these are a couple of the positives. It is F&O expiry week as well. So I guess the important point to note is whether, you know, the market is still in favor of the bulls or not. Anuj, morning. We, of course, have HDFC Bank's numbers that could sort of sour the sentiment. But give and take everything, do you get a sense that this week is going to be, you know, the week of the bulls, given that the trend has been positive so far?
Yeah, morning, Sonia. Morning, Lata. Look, I mean, I have very low conviction about today, frankly. I think it's just one of those days where I don't know how things will pan out. This GST is, you know, a positive benefit, which, I mean, it came out of nowhere. It's a bit of a mini stimulus that you have. So obviously, that's a bit of a near-term positive. We could argue about the medium-term impact on that. You know, so today's battle is this GST benefit versus HDFC Bank disappointment. So let us see how, you know, it pans out. I don't want to take any bet on that. The basic point is it's a well-defined band, 10,920 to 11,070 on the Nifty. This month we have outperformed our peers, which is important because even despite the move in the rupee, the MSCI emerging India is up 2% versus flat move for the other peers. So that way it's looking okay. I think for me, the more important thing is to see if this buying which is emerging in Nifty Junior. I think on Friday, there was first sign of some buying emerging in Nifty Junior, good quality stocks. Motherson Sumi, for example, ended at the highest point. I would want to see some of these stocks to see how things are moving. If you get a dip, because of HDFC Bank or any reason, then say perhaps buying near 10,950 offers a good risk reward. And if 11,070 sustains, we've gone there thrice and come back from there. So if it sustains, then you can expect some big short covering. But I think today you focus on individual stocks. I think Bata's got good triggers both ways. Havel's got good triggers both ways in terms of earnings, GST. I think you focus on those on the negative side. Exactly, paint companies. On the negative side, perhaps South Indian Bank. I think today is a day where you focus on individual stocks. On the Nifty and the Bank Nifty, let this reaction play out. This GST benefit versus HDFC Bank. Let that play out. Once that plays out, I think in second half, you'll get a beautiful trade on the Nifty and the Bank Nifty, whether the low of the day holds or high of the day holds. According to that, you can take a call.
Okay, just one more point to add to what you were saying in terms of, the two big factors, GST and HDFC Bank. Many of the finance numbers have been subpar. HDFC Bank, of course, is giant and influences the market. But so has been L&T Finance because they have adopted Ind AS. South Indian Bank also is a little subpar. And generally, when the fisc is, when you're spending more, it's not a very big positive for the bond markets. I don't expect them to react too much, maybe a few basis points higher. So all told, maybe today is the day when Nifty will perform better than Nifty Bank. Because finance is in a difficult spot, but non-finance is in a better spot.
Probably. And just to carry forward the point that you made on ADMK, I think it's a positive. The only problem is ADMK is now, slightly weak than what it was when Jayalalitha was at the helm. But I think on that, they will need numbers because they will lose some numbers from the Hindi belt, like the UP, Bihar, Rajasthan, MP. They swept that entire belt. Obviously, they'll lose some numbers, so they need to make up for some numbers. So that way, I think I agree that was a bit of a positive.
Yeah, actually, we should have a specialist from Tamil Nadu, maybe our own Suntar Rajgopalan or somebody to explain to us because it's an extremely moving piece there. Yeah. You don't know who is the AIADMK. There are so many different pieces, but that doesn't mean the DMK is taking advantage. Even that is splintering. So, yeah, that's another terrain altogether.
Okay, on that note, it's going to be a long week, lots of triggers lined up. So let's take a look at what our wise experts have to say as we head into trade this Monday morning. Sayan Mukherjee of Nomura writes about the, the GST news that came through. Consumer discretionary segment is likely to be the key beneficiary of the GST rate cut, he says. He also says amongst the companies under our coverage, the cut in the GST would impact Kansai, Nerolac and Asian Paints. He says the companies would likely pass on the impact of lower GST through price cuts. And this augurs well at a time when the input costs for the paint industry is on the rise. He also says the price cuts will lead to stronger volume growth in the sector. However, he adds it will adversely impact revenue collections initially.
Yeah, I believe the revenue collection impact is 7,000 crores. That, the total GST is 1.2 lakh or 1.3 lakh crore. 7,000 crores should not be noticed, but let's wait and see. So on that note, money market cues, Pramit Brahmabhatt of Veracity says that the rupee will have a negative impact on the back of, will take a negative impact on the back of higher crude oil prices. He expects the spot USD INR pair to trade in a range of 68.80, 69.20 for the day. Pramit probably said this before he saw the dollar index. The weakness in the dollar index may counter this impact.
Okay, about the bond markets, Ajay Magnolia of Edelweiss says the oil and currency will be the key determinants of the yield trajectory, while the positive bias might persist on expectations of additional OMO purchases. He says the 10-year benchmark bond yield is likely to trade in a range of 7.76 to 7.81% today.
Okay, then over to Nigel for the world view.
Well, the US markets ended more or less flattish. Remember, the futures were indicating a sharp downtick, but the earnings that came in, that was more than enough to offset the comments that came in from Donald Trump in the previous trading session here on CNBC. Now, the result reactions, they were a tad bit mixed. Microsoft delivered a good set of numbers that was rewarded, ended higher. Honeywell as well ended higher. But GE ended lower with a cut of around 3%, but more positive than negative results is what we saw. Donald Trump had tweeted, in fact, that, the currency is weakening of other countries. And in fact, the interest rates as well, the rate at which Fed is going, he doesn't like it too much. And that's why we saw a reaction actually on the dollar index. Because from around 95 plus, it's coming at around 94.2 odd this morning itself. European markets as well, they ended lower in Friday's trading session. All the three frontliners, they did see some selling. Reports suggest that the European Commission is preparing regulatory tariffs in case the US levies taxes on the European Union. So that's why we saw a lot of these auto stocks under pressure. We have Daimler, Volkswagen, Fiat, all of them ended with sharp cuts in Friday's trading session. And that explains why the European markets are under pressure. The Asian markets this morning more red than green, though the Hang Seng has come off nearly 1% from the low point of the day. The other markets, though, there's more red than green. The SGX Nifty is indicating a more or less flattish start.
Okay, thank you very much for that, Nigel. The sense is today the domestic cues are going to dominate global cues. And so the big story of the morning remains the unexpected slew of GST rate cuts by the Council. Mr. H.M. Bharuka, the Vice Chairman and Managing Director of Kansai Nerolac, joins us on the phone line. Good morning, good evening, Mr. Bharuka. Actually, you're joining us all the way from the United States, and thank you very much for staying up for us. What is the sense you're getting? How much is the benefit for, is there a P&L benefit for paint companies, or will you just have to pass it on?
Good morning, Lata. Nice to talk to you. The benefit, of course, is big benefit. I mean, 10% reduction is not a small reduction from 20 to 18. And I think they are duty-bound to pass on this to the consumer. And I think overall EBITDA level of paint companies are very good. And I don't think we should become a greedy. And we should pass it on entire benefit to the customers. And the government has taken a very bold step, I must say. I think it could be about 4,000 to 5,000 crore loss of revenue for government.
That's it.
And we have to pass it on, and we are determined to pass it on.
Okay, Mr. Bharuka, good morning. Good speaking with you. So this entire benefit will get passed on in terms of a price cut. What would this do to your volumes? What kind of growth do you see overall for the industry as well as for yourself?
To some extent, I think this paint demand has been priced inelastic, though it is not right for me to make such statement now. But last 28 years, we have been having a double-digit growth, and I have been saying maybe next 20, 25 years, we will have a double-digit growth. So I think growth is there. Even in the first quarter, we have clocked the growth of 16%, despite, it has nothing to do with the low base effect of last year GST. So I expect volume growth to continue in decorative. Industrial, of course, depends upon the entire industrialization. But in decorative, volume growth should be better than what it is. It may take some time. But I think most important benefit, as far as I am concerned, with this 10% reduction is there were some, manipulation activities which were going on in the market because of the high rate. I think that would, and the price disturbance which was there in the market, that will get stabilized. And maybe you will find government may not actually lose revenue, they may gain revenue because government knows why they need to reduce 20 to 18. So I'm sure the loss of revenue may not be much actually, but definitely it's a big issue.
Well, they have calculated it as 7,000 crore. Mr. Bharuka, do stay on. You may not paint your house because paint is cheaper, but you will definitely want to replace your mixer or your hairdryer because it is 10% cheaper. So let's ask Mr. Shekhar Bajaj, the Chairman and Managing Director of Bajaj Electricals, who has joined us on the phone line. Good morning, sir. Are you also planning to entirely pass on the tax benefit? And if products were 10% cheaper, do you expect improved demand?
When the initial reduction took place in the lighting and in the fans, we immediately passed on the full amount, and same thing which we'll do in appliances that now that it has been announced. So that also is absolutely because for two reasons. One is, of course, it is government has shown a good gesture, so we must honor that. And second is, if one does not do it, he loses out. I found last time one or two companies did not pass on the full benefit, and we gained market share because they did not pass on the full amount. So people understand that, okay, if there's a 10% reduction. So what we did last time was when 100 became, suppose, 90. So we said 90 plus tax. Earlier it was 100 plus VAT. Now it became 90 plus GST. Now the 90 remains 90. And instead of 28% to be added, now it will be 18%. So therefore, that will be straight away passed on. There's no question about keeping that money at all.
Sure. Mr. Bajaj, good morning. What percentage of the industry comes from the unorganized space? And now with this, do you see a big shift from unorganized to organized?
See, two things. One is that, which I've been saying for a long time, that as far as our products are concerned, and even they've done it for white goods like refrigerators and air conditioners, our goods do not fall under the what I would call as a sin rate. You know, they said 28% sin rate. How can a iron and a toaster and a mixie and a geyser? So that was, according to me, in terms of positioning at 28% itself, I did not understand, and I've been saying that that is not, so therefore they've corrected.
No, Mr. Bajaj, no.
Yeah, I understand.
I just want to know whether the volume of demand will increase.
No, demand will definitely, because we've got a very strong distribution that we have created in the last 2-3 years. And because of that gap between unorganized who may not be paying the tax and ours will now go down to only 18% instead of being 28%. Clearly, the rural demand is going to go up and we can expect substantial additional market share coming out of that market. So I think because of that, 8 to 10% increase in volume will take place because of this price reduction. Because though it's like earlier person was saying that in Asian paint, the paint is inelastic. While in our case, it is very elastic that if a person, because he will go for the unorganized sector, so he may still buy iron, but he says, I can't afford a 500 rupees iron, I'll buy a 400 rupees iron. So the person will buy iron. So I think unorganized sector will lose out in this particular case. Plus, because of GST, anyway, they've lost out those who are not paying taxes.
Okay, Mr. Bajaj, thank you for joining us and giving us your quick take. Mr. Baruka, I wanted to come back to you because you guys came out with your numbers as well on Friday. You know, this time the numbers have been very good on the volume front, but the problem once again is on the margins because of higher input costs. Do you think you'll be able to pass on the input price hikes, especially to your industrial clients?
It's difficult actually because it is case by case and there are contracts involved, and it is not only related to India. I mean, these are all global customers, so we go as per the global pricing also. So this is a difficult situation, to be very frank with you, and we have been talking to our customers, and there are progress which have been made, price increases we have already got, but it's a slow progress. So to that extent, I think, yes, we will remain under pressure. But at the same time, as I always say, that we don't look at quarter on quarter, you know, we need to look at a long term. If I look at last 28 years CAGR of, Nerolac, I mean 15 years CAGR, it is 28%. So I think I should look from that perspective rather than looking at what happens to this quarter. And our shareholder and stakeholders, I think they are aware of it.
Okay. What will be the, I mean, how much of a volume increase are you expecting at all? Both because of GST and because now you enter into the post-monsoon harvest season?
It's a little difficult to comment. I would say, definitely this will help us. At least premiumization will take place. So if somebody was, painting a distemper, now he finds suddenly 10% cheaper, he may shift to an emulsion, or even in the emulsion lower category to higher category. So I think that extent this will take place. As far as volume growth is concerned, I think that will go as per the maintenance demand or the new project demand which goes on.
Okay. Exactly how much was the volume growth this quarter?
It was 16%.
You mean average domestic and industrial?
That's right. And in the domestic was higher slightly.
Okay. And in the decorative paint segment, what are you expecting both in terms of volume and price growth? What was it this quarter and what is the expectation going ahead?
As I said, even volume growth was about 16.8, value growth was about 16.7%, and it was slightly higher in case of decorative. So you can say 100 basis point more for decorative compared to industry.
All right. Okay, Mr. Baruka, thank you very much for staying up for us, and thank you, Mr. Bajaj, as well, for joining in this discussion. So expectation is that both unorganized sector market share as well as perhaps improved consumption because of lower prices will benefit consumption goods.
Morning, the Asian markets are under a bit of pressure. The Japanese market, to be particular, is down more than 1% right now. That's because the yen has strengthened quite a bit since the dollar has weakened. So now Japan is down 300 points, as you can see. The rest of the markets are doing just about okay. I mean, Hong Kong is a bit under pressure, Shanghai is in the green, but Japan is the one that's really taking it on the chin. Let's find out how our markets will shape up today. Let's talk about all the stocks to watch. Anuj is here. Anuj, what are you looking at?
So again, not very high conviction. Perhaps Mangalam and others will have the list that will really move. But a stock I'm watching out for is Cipla. It's bounced back from 20-day moving average, 60% jump in delivery volume. So that perhaps could be on the radar. Hindustan Unilever, stock trading between 20 and 50-day moving average. anecdotally it bounces back from this zone. So that's something that I would want to see. But again, these are stocks that I would want to see if there's any, follow through in the market. But today you'll be better off looking at the stocks where you have some real good news.
I take your point. So before we get to the GST stocks, since we have discussed them amply, HDFC Bank. Abhishek, what was the point of dissatisfaction?
Well, Lata, the loan growth remains strong, but the other metrics, that is the asset quality or the P&L growth, remain weak. So loan growth has picked up at 22% YOY versus 19% that they clocked in Q4. However, the NII growth and the operating profit growth at 15.4 and 15% are the lowest in last 8 quarters. You look at the net profit growth at 18.2% is the lowest in last 6 quarters. Slippages increased by 400 crores quarter on quarter to 3,550 crores. That led to gross NPA and absolute value increasing by nearly 11%. So the gross NPA ratio, however, remains stable due to the fact that there was loan growth. So it was at 1.33 versus 1.3% sequentially.
Okay, thank you very much for that. I can't remember when last HDFC Bank had only 41% of their total deposits coming from CASA. They normally have close to 50%. Okay, now for the big story of the morning, UPL has signed the deal and has become the 5th largest agrochemicals company. Sonal, tell us about the P&L.
That's right, Lata. So basically the total deal, the consideration is around $4.2 billion, out of which $1.2 billion will be invested by TPG and Abu Dhabi Investment in the wholly owned subsidiary, and $3 billion worth of debt will be taken by the company, and that was the biggest worry that the street was fearing. However, management sounded quite positive. They expect synergies of around $100 to $120 million in first year, and in next few years around $200 million. The incremental interest cost will be around $120 million, and EBITDA, that will be around $425 million. So overall the deal looks good. All the brokerages have positive stance. However, they have lowered their multiple because the deal will be around Q3 FY19, and also debt will be a concern. Back to you.
Okay, debt is a concern. CLSA says the acquisition is EPS accretive despite no synergy benefits till FY20, and they have a target of 940, big upside to the current market price. But Rima is also here. She'll tell us how Wipro did this quarter around. Rima?
Hi Sonia, on the whole mixed. So Q1 revenue performance and the Q2 guidance was slightly better than muted expectations, but on the flip side their margins were a miss, and even the management commentary on growth was a bit subdued. So mixed quarter, but the ADR was up close to about 1.5%, so maybe at least the first take for Wipro could be in the green. So first on the numbers front, constant currency growth at 0.1%, better than expectations of a -1% growth. That said, it's still significantly trailing its peers. 0.1% growth for Wipro compares with the 4.1% that TCS had. Adjusted margins were a big miss, especially considering the rupee depreciation. Q2 guidance is coming at 0.3 to 2.3%, and the management commentary was not good on healthcare, and now manufacturing too has reported a degrowth, so that too was the sore point. Company has also announced an acquisition of Allied Solutions India business.
Okay, so net, do analysts say it's red or green? Better than they thought or worse than they thought?
I think very slightly, given the expectations were muted and the stock has been an underperformer, we would go with green, so slightly better than expectations.
Yeah, so the ADR was up 1.5%, so we have a bit of a market reaction in place. Let's see if that is the way Indian stock also reacts. Rima, thanks. Anisha, there's of course a lot of stocks which will be reacting to GST move.
Well, yes, Anush, we have talked about that, and the list that I'm going to present is not exhaustive because over 52 items rate was cut to 18% versus 28%. Now, this might not impact companies' bottom line directly, but will cause a volume expansion. Now, to just mention a few companies, the white good and brown good makers will be reacting positively, given the fact that GST rate cuts has happened on the likes of refrigerators, vacuum cleaners, washing machines, etc. TV maker, which have the bandwidth lower than 68 centimeters, will also see a tad bit of benefit. Leather goods as well might react positively, given the fact GST rate has been cut on that. Paints is one important sector to watch out today, because we have heard a lot of brokerages as well as management talk about the volume growth that this GST rate cut could cause. Also, the hotel industry is something to watch out for, because if the actual bill is below 7,500, then it will attract 18% GST, so a tad bit positive. And footwear makers, because under 1,000 now it will be a 5% tax slab versus 500 rupee limit that was there earlier.
Okay, thanks. We'll watch for all those stocks that played out. Abhishek, L&T Finance also disappointed.
Well, Lata, IND-AS method of accounting has disappointed on the overall performance of L&T Finance. So the stress assets, which can turn bad, have increased to 7.93% of the book versus a gross NPA of close to 4.8% in the previous quarter. Their disbursement growth remained muted at just 7% YOY, but their AUM growth at 24% remains strong. So defocused business continued to decline, and that share was at 1.4% versus 3.4% of the book YOY. I expect the stock to be in red today.
Okay, expect the stock to be in red today. But the stock should be in green, should be Havells. Anisha?
Oh, well, yes, the numbers came in dying hours of Friday straight and the numbers look solid. And the good news is that the growth is broad-based and across all segments of the company. Now, of course, there is a bit of low base impact as well as the impact of Lloyd acquisition. And the management says that this quarter's growth cannot be extrapolated to the entire year. But you can't take away the fact that the growth has been solid. The consumer durable business did well. Lloyd showed a growth of around 15%. And this is despite the likes of Blue Star telling us that the AC business might see a decline in Q1. So that really is a positive. Switchgear business that has been languishing for a long while actually recovered to a double-digit growth. Also positive is that the margin came at around 12% versus the 10% level that we have been seeing in the last many quarters. See a green on that one.
Okay, a green on Havells. It's been a stock that has rewarded investors. It's almost doubled in the last 2 years. But Abhishek can't say the same about South Indian Bank.
South Indian Bank, the balance sheet growth remains strong, but it has come in at a cost, that is asset quality. So the loan growth is at 8-quarter high at close to 19% YOY, while slippages remain elevated at 609 crores. This led to a sharp knockout in terms of net interest margin being at 2.6%, which is the lowest in last 12 quarters or 3 years. So gross NPA in absolute value increased by 29%, while the gross NPA ratio at 4.54% is the highest ever for the bank. Back to you.
Okay, thanks a lot for that. And now quickly, Judge Dial as well, Rima.
Well, a decent set of numbers. So revenues are in line, margins are a big beat, profits are a miss. So revenue growth has come in at 11.3%, the highest in the last 11 quarters, but on expected lines. The big beat is coming at the margin level. Margins are up by 1,000 basis points year on year. On a quarter-on-quarter basis, margins have improved by 435 basis points. Profits are a miss. They're absolutely flat on a year-on-year basis. And the key reason is their other income, which is huge, has declined. And that's because of losses on their bond portfolio on account of the increase in the bond yields. The board has also approved a tender buyback of 220 crores at a maximum price of 800 rupees per share. So that also could provide that upside.
Okay, Rima, thanks a lot for that. Well, one of the stocks of the day should be Bata. There's a good chance that it opens at a fresh high. Mangalam, good numbers.
Absolutely, Anuj. Very good numbers. Soul stirring is what I said, Soul with S-O-L-E. 8% revenue growth, absolutely in line with what we were working with. But the kicker came in from the EBITDA, 38% growth. That's the third straight quarter of 30% plus growth on the EBITDA front. Margins at 16.5% have led to about a 37% growth on the top line. The management commentary was also very positive. The new campaigns that they've launched, the new ads, national as well as regional, have really worked in their favor and increased premiumization as well. Add to that, the rent rationalization means that rent as a percentage of sales has come down from 16% to about 11%, and the further cushioning, of course, has come in from the GST as well. So the threshold, which has been increased from 500 to 1,000, will be a positive for Bata.
Okay, positive for Bata. Phenomenal growth here. In fact, Bata India is likely to turn the largest market for the parent company by the end of 2018, beating the Italian market as well. So strong growth seen there. But Sonal, what are the other stocks in the news this morning?
I'll start with MCX, Sonia. A weak set of numbers. Revenue declined by around 2% on a YOY basis, and profits, they declined by around 72% on a YOY basis. Expect some red on that stock. SpiceJet will be in focus because the arbitration tribunal has ruled in favor of SpiceJet. This was in relation to the earlier plea by Kalanati Maran regarding to that 1,300 crore claim. Jubilant Life Sciences will also be in focus because company Subsidiary in Canada has initiated an optimum trial, that is phase 2 clinical trial for one of its drugs. So that will be in focus also because it is planning on listing its pharma unit in Singapore. Hathway Cable, the board has approved raising of funds up to around 100 crore rupees by preferential issues to the promoters, and issue price will be the higher of the price determined by SEBI, or 32 rupees, which is way higher than the current market price. Reliance Power and Reliance Naval will also be in focus because of the weak numbers that they have reported. Back to you.
All right, thanks a lot for that. Well, let's do a quick recap now of our top 10 stocks to watch. Stocks with positive news flow: Cipla, HUL, Whirlpool, Voltas, Godrej Consumers, Bajaj Electricals, Havells, Merck Electronics, Lemon Tree, Indian Hotels, Bata, Asian Paints, Berger Paints, UPL and Wipro.
Oh God. And those also on positive impact are Just Dial, SpiceJet, Jubilant Life Sciences, Hathway Cables. Stocks with negative news flow are HDFC Bank, L&T Finance, South Indian Bank and MCX.